to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the globe. Coming up, TAF number 2 vote gets the backing of Primary Industries Minister David Carter. Britain suffers a double-dip recession. What's it mean for us? And how healthy are New Zealand's banks and financial institutions? A KPMG checkup headed your way. We kick off today with the latest trade surplus. It worsened in March, down to $230 million, thanks to a falling export price and that high exchange rate. Exports exceeded imports by $134 million, or 3.3%, well down on the expected $445 million surplus. Exports at $4.2 billion were $400 million down on last March, an 8.7% decline. Dairy, meat, and forest products were also down from a year ago. Imports at $4.1 billion were up just 1.2%, with a $300 million or 50% increase in the value of imported oil and petroleum products. On a trade-weighted basis, the New Zealand dollar appreciated by 12% for the same period. Question: should the Reserve Bank have a currency target when it decides how and when to move its official cash rate? Still sitting at 2.5%. Joining me today is Ross Buckley, Executive Chairman of KPMG in New Zealand and a Chairman of Agribusiness as well. And Ross, is it time for the Reserve Bank to manipulate our currency?
Great to be here, Genevieve.
Good to have you.
Yeah, good, thank you. No, I don't think they should intervene. I actually think there's a free market, and if they tried to intervene, market forces would just override eventually.
Now, we see across the ditch, yesterday the Reserve Bank of Australia fooled everybody. Nobody was picking it. They have cut their interest rate. What do you make of that?
I think some people were predicting a drop in Australian official cash rates, and they do need to inject a bit of life into the economy. You know, it is very much the mining sector there, so they needed a boost, and I think the drop in interest rate was required, and it brings a bit more parity with the New Zealand economy. Now,
some critics are saying that they think that the cut over there really highlights the pressure that banking funds are under, both in Australia and New Zealand. What do you think?
Banking funds, at the moment, I think people are looking for a very cautious place to invest their money. Therefore, banking deposits are very much a safe haven. Not great returns, but a good place to put your money. You want to reserve and preserve your capital. So bank deposits are a good, healthy position at the moment.
Now, KPMG has just released its annual FIPS survey, Financial Institutions Performance Survey. What does it tell us about how the banking institutions in this country are really doing?
Yeah, it's our 25th year of the FIPS survey. What it does tell you is the banks are in good shape. They are strong, they've made good profits, and you do need a robust banking sector to underpin economic recovery. So overall, a good score.
People are saving more, borrowing less. What's the impact on the banks and the financial institutions?
That's right. So our imagery supporting the survey would be a wallet with money in it. People have got money, but what they're doing is saving, they're deleveraging. As a result, the banks don't have to be so competitive for the deposits. So there's not much pressure on deposit rates. So the banks have attracted deposits, and it's now what options do New Zealanders have for their spare cash.
And when you look at overall how the financial institutions did in 2011, what impacts do you see on the rural sector, Ross?
The rural sector is very interesting. From the period 2005 to 2010, we saw the rural sector debt grow from 25 billion to close to 50 billion. Over the last 2 years, we've seen that level stabilise. So the rural sector has actually had some quite good returns over the last 12, 18 months. That's enabled people to make sure they're servicing their debt, even repaying a bit of debt. So I think we see that level stabilising on borrowings to the rural sector. So overall, fairly positive.
Now I'm going to ask you about finance companies. In 2011, many problems. We now see some directors off to jail. How would you describe their performance this past year?
That's right. We've seen quite a big decline in that sector. They reached a peak in 2007 of about $17 billion of assets under management. That's now down to about $9 billion, so significantly smaller. I think we have weeded out a number of the weaker players. There has been a level of consolidation. We've even seen some companies like Marrick become Heartland, and they're now trying to get a banking licence. So overall, the sector is in better shape. They've made reasonable returns, and the level of bad debts is a lot less because it's all been cleaned out over the last 3 or 4 years.
Are we likely to see overseas lenders too making it tougher for our banks, wanting to get more money out of us? And how's that going to affect people like you and me?
That's right. Our banking sector does borrow funds from overseas, and that gives them certainty over volume and price. But over a period of time now, with the availability of deposits, that percentage of foreign funds is declining. And I think the banks really have a target over the next 2 years to get that level of overseas deposits down to below 30%.
And where do you think consumers should be putting their money? Where do they seem to be putting their money these days?
I think because people want to retain their capital, the bank deposits is a very safe place to be. But I think people are waiting for the sell down on the privatisation of some of the SOEs, so that when the Genesis, the Meridians, and Mighty River Powers, that'll give people another option to get a very good return for their money.
We're still not out of the mess, if you like, with the global financial crisis. What is your take on what's happening over in Europe at the moment?
I think Europe is quite concerning. Their unemployment rate has just reached 10.7, 10.8%. That's the highest level across Europe since June 1997. We've seen Spain reach close to 25%. We've seen headlines about UK going into double-dip recession. I think it is quite concerning, and it does have a little bit of impact here in New Zealand. I think we're quite fortunate we're closer to Asia, and the demand for a lot of our products is now in Asia, so that's helping us. So we're in a good spot. But the recent statistics and news out of Europe, none of it's very positive at all.
And I'll tell you what also isn't positive, the fact that fraud, according to KPMG again, is on the rise here in New Zealand. What are the latest findings?
That's right, we've just done a fraud survey. That has been impacted by a couple of large-scale frauds. So if you back that out, the numbers aren't quite as alarming, but obviously we've dealt with some big issues really in the finance company sector that has distorted those numbers. Thanks,
Ross. Coming up after the break, make or break time is looming for Fonterra's army of farmers as they prepare to vote once and for all on TAF. Back to the future on a wool levy? And those spurned Crafer buyers continue to complain, while Alan Crafer claims he's got offshore money that will let him buy back all those 16 farms despite the Chinese deal. But first, according to the New York Times, a new report says climate change is likely to have a far bigger impact on corn prices over the next 3 decades than anything else. Here at home, of course, the maize harvest has been underway. The study suggests that unless more heat-tolerant corn varieties are developed or production is shifted north into Canada, North American grain supplies will fall prey to sharp price spikes because of frequent heat waves. The research says a moderate warming trend will likely increase the number of days of severe heat in the growing season, doubling the volatility of corn yields. So answer this in our Farmers Facts and Figures quiz. What 3 other factors are likely to affect grain prices over the next 30 years? Welcome back to Money Talks. Just before the break, we asked you what 3 other factors are likely to affect grain prices over the next 30 years. Oil prices, biofuel mandates, and trade policies. We're back now with Ross Buckley and his colleague, Ian Proudfoot, a fellow KPMG partner who specializes in agribusiness. And let's talk about the latest global dairy trade auction overnight, Ian, down 2.4%.
Better news than last time, I suppose, but still not good news. And I suppose now my thinking is that's got to be playing on the year-end dairy payout. And the pricing as it's looking is making the situation pretty bleak for the next season at the moment.
What are we sitting at now, and what are you predicting at this point in time?
For the opening price for next season, I'm probably thinking it's definitely got a 5 in front of it, and I'm probably moving from being upper 5s to somewhere around mid-5s, so maybe somewhere 5.20 to 5.50 as an opening price. So I think, you know, when you look at it, and you were talking earlier with Ross about the banking situation, that's going to make life pretty tough for a lot of farmers next season.
Yeah, and I'll tell you what else is going to make it tough for Fonterra, not necessarily farmers. They've had to back down on this TAF vote. They are now holding a second vote on June the 25th. What's your take on it? I
think it's a good thing. You know, we've been going through the process of preparing for the next agribusiness agenda at the moment, and the feedback we've been getting in going through that process is, you know, Fonterra needs to ensure that it's treating its shareholders in the way other major corporates would treat their shareholders. But it gives them the information, provides the ability to have a discussion and a debate on an issue, then takes a vote. I think there was some concern and some unease that effectively they were using a very draft scheme when the first TAF vote took place about 2 years ago to try and keep going with the process. I think that the new vote is a very good idea from my perspective.
How do you think the vote will go?
I think they'll win the vote. I think it will need a good, robust debate. There's clearly some people that aren't happy with all the components of TAF and want to be very comfortable that farmer control's retained, but I'm pretty confident they'll get through that vote.
The critics, what are their biggest fears about this scheme?
Well, it all seems to be, there seems to be two main things. One is, whether farmers retain complete control of the cooperative. I can see nothing in the structure of TAF that's going to impact on that. The second issue is around how the split between dividend and milk payout plays out. And the view is that if you've got external investors, and particularly some large institutions on the trust side of the ledger, putting pressure on for higher dividends, then that will impact on milk prices, and therefore the farmers that do choose to split their investment will lose out because they'll get less for their milk.
Ross, Fonterra badly needs TAF, doesn't it? They need more capital. They need stable capital. What is the risk if they don't get this to their business internationally?
That's right. I think it is very important for the future of Fonterra and for them to achieve their strategy. They need to have the structure in place to attract the capital, to give a little bit more liquidity so they can do some of their overseas expansion plans. And we know what they're doing in China. They know what the demand's going to be for their product. So I think it's very important they can get this mechanism in place. And as Ian said, I think it's important people do understand the structure. It is complex, so they need to understand it to vote on it and vote the right way.
Do you see this as a big back down for Fonterra? Because they were pretty staunch for a long time that they didn't need to go back to the shareholders.
I think the structure's got more complex and people probably haven't been briefed and don't understand it as well as they should. Therefore, I think it is wise to go back, educate them, get them to buy into it, and then get a good solid vote for it.
I think it's absolutely critical. When you look, FIO came out 2 or 3 weeks ago with a new strategy which was all about investing offshore, building milk capacity, growing in developing markets. They need them finance to make that happen, and if they can secure that through TAF and enable that to happen, then it's got to be positive for New Zealand. So I think it's a really important thing that the government supports it and the farmers get in behind it. From
dairy to wool, and apparently to the latest Australasian report from Rabobank, they figure that China could be the savior for our wool industry. What's your take?
I think the real challenge with wool is we've got to work out how we're going to use it to actually leverage it in the long term. There's definitely options in China. There's opportunities in how you use wool in terms of sustainable building products, sustainable clothing, sustainable carpets. Is China the answer? Probably not. At least not where we're going to sell the product. I think the answer has got to come from where the consumers are going to be. And they're most likely to be, at the moment, in Western Europe and the United States, where people still have the ability to pay more for their products. We've got to understand what our customers want and how we can make that happen with wool. And I think the model, therefore, is not necessarily a Chinese model. It's more like New Zealand Merino are doing, which is ensuring you understand the customers, build partnerships with them and add value to their business.
Meantime, there's some talk at Beef and Lamb, some of the members of the organisation, they seriously want to report into investigating whether or not we should bring back the wool levy. What do you think?
I think there's a lot of water that needs to flow under the bridge on that one, and from my perspective, it needs to be investigated as to how it will create value for the farmers. And a levy can only be successful if it does create value for the farmers. So I think there's obviously a small group that believe a levy is a good idea. I think there needs to be a much wider piece of work done to determine that.
We got to talk, of course, about Crayford Farms, and I still refer to it as a Crayford Farms, and I think a lot of the public does too. Even though it's been sold to the Chinese now, Shanghai Pengjin, Sir Michael Fay's group has put in a fresh appeal to a court in Wellington. Is this ever going to be over, Ross?
Well, I can see him persevering with trying to get a bargain. So I think what we've probably done is maximised the revenue we can from selling the farms. And don't forget there is a role for Landcorp farming involved as well, where they're going to manage the farms. Yep, will Michael Fay stop? I don't know.
Peter Dunn now wants a review of foreign ownership laws. He's afraid that we will become tenants in our own land. What do you think?
I think there needs to be some limits around the level of foreign ownership. Obviously there was a lot of noise around reciprocity. And if you take the Chinese, for example, we're not allowed to own land in China.
Absolutely not.
So I think that is a valid point that we should be raising. And perhaps we could have let the Chinese take a long-term lease on the Crayford Farms for 100 years to show some reciprocity and mutual agreement there.
That could have worked for you.
That's right. Could have worked, and worked for the wider outlook for the New Zealand economy as well.
So why wouldn't the government opt for something like that?
I think it does have to be reviewed, and I think it should be considered.
We're shooting ourselves in the foot here, and this is becoming a real issue for New Zealand, and it's a real issue for New Zealand farmers, because what we're saying to investors is we don't know what you need to do to invest in New Zealand. We can't make up our own rules. they're not going to want to invest here. There's no certainty, there's no basis for a solid, robust investment in New Zealand if this carries on much longer. And all that's going to do is impact on farm prices. We've been selling farms overseas for decades. That's nothing new. It's always been happening. It's just this time, as a large group of farms and being sold to China. The emotion is too strong. We need to back off the emotion and think business. And the business rationale is we've bought and sold farms from foreigners for many, many years. You just look this year, you know, the South Canterbury Finance and the US investors in the dairy holdings, that's been reacquired by New Zealanders. We've got control back of those farms. There's more farms involved in that deal than there is in the Crayford deal. So we're damaging ourselves with this at the moment.
Thanks, Ian. Coming up after the break, future-proof on the highways and byways of the economic world as our experts point out what's coming up. But first, in the world of research and development, Ag Research reckons weeds cost the economy at least $1.2 billion every year. Currently, Ag Research is working with American scientists to see if rust, for example, might control California thistle. And they say one way farmers can help to reduce the spread of the thistle is to mow it in the rain. So answer this in our Farmers Facts and Figures quiz. What percentage of thistles could potentially be controlled by rain time mowing? Welcome back to Money Talks. Just before the break, we asked you what percentage of thistles could potentially be controlled by rain time mowing. As much as 30%. And now it's time for Future Proof. What's coming up for our experts? But before we get to that, Ian, I want to talk to you a little more about Alan Crayford. He says he now has offshore money, Indian money, that's going to allow him to buy back the farms. And technically, this might be possible.
Yeah, I think Alan Crayford said before that he's had offshore money from a number of different places and that money's never eventuated. As I said before the break, I think it's important we just get this transaction through, settled and out the way, and focus on how we build our economy and how we build our farming sector to make it as effective as possible. And we actually celebrate in the public media the real positives of what's going on in New Zealand agriculture, rather than continuously to drag on about this rather unfortunate event that's now taken over 2 years to work its way through the system.
We talked earlier about TAF, of course. The fact is now the Chinese company Shanghai Pengjin owns 5 million shares of Fonterra. Is this a concern?
Just like any other farmer, they've got to be shared up to supply Fonterra. All that means is that they're going to benefit from the overall processing efficiency and networks and markets that Fonterra operate in, but they benefit in exactly the same way as any other New Zealand shareholder of Fonterra. So, you know, is it a problem? Not to me. It just reflects the fact that they own shares that are supplying Fonterra. I think that's better they're supplying Fonterra than trying to do their own processing.
Okay, gentlemen, now put on your thinking caps, because Murray, one of our fantastic farmer viewers, had a couple of questions. And I knew you had big brains, so I thought I'll save them for you. Okay, here's one of his first questions. If the Crayford deal proceeds, how much tax will the Chinese investors pay to the New Zealand government, knowing that overseas investors have ways and means of avoiding this? What do you say to Murray?
Well, they're clearly going to be supplying Fonterra with what you've just talked about in terms of owning Fonterra shares. So they will receive a milk return from Fonterra. How to be able to transfer price that out of New Zealand will be very difficult, because they won't be moving the product out of New Zealand because the product is going out through Fonterra. So I think they'll end up paying the same amount of tax as other New Zealand farmers. Okay,
Ross, here's a question for you. Assuming that Fonterra can only lease land from China, does Fonterra have a cast iron guarantee or insurance that a future Chinese regime will not decide to nationalize the billion-dollar investment that they've made on behalf of Kiwi shareholders?
Well, that's always a risk with dealing with China. I think with the nature of their political structure and so on, I think they can make decisions that could override existing structures. So I think it's a risk. I'd like to think Fonterra have considered that risk before they've made the big investments into China.
Let's talk a little bit about what's going on around the world. The UK, where you come from, Ian, I understand, has suffered a double-dip recession. How bad is it over there?
I'm not precisely sure. I haven't been back for quite a while. All I'm reading is in the media and, you know, talking to friends and family as well. It's pretty tough. It's been tough over there for about the last 3 or 4 years, and I don't think people are seeing any dramatic change. They're very focused on the Olympics. They're focused on leveraging the maximum value out of that for Great Britain, and ensuring that Britain takes its place in the world stage and really shines. So at the moment, I think while the economic figures may not be that positive, they've had some really good, they're building up to the biggest event they've ever had in the history. And you combine that with the fact they've had great weather because they've not been raining very much for the last 2 years.
Ross, what's your take on the European economies? I see that France is going to the polls on Sunday, and also Greece are going to the polls, and the people are out in the streets. They don't like the austerity measures. There seems to be no end in sight to the troubles in Europe.
That's right. I think you raise a very good point. Not only are we with a financial crisis, we also have huge political uncertainty. We've seen the Dutch government walk out as well. So the real challenge is, if you're trying to implement these austerity measures, how do you do it when you've got such high levels of unemployment and uncertainty? So I think the outlook is even more challenging due to this political uncertainty. And now we've just seen it across the Tasman as well. I think the Australian situation is another example of how political uncertainty can have quite an impact.
What are you picking could happen in Australia, and how might that affect, for example, the rural sector here at home?
The impact of Australia, obviously might be an early election. There's obviously quite a bit of uncertainty or lack of support for the current government. Does it have a big impact on the New Zealand rural sector? I don't believe so. We have seen a trend recently with the cost of labour where some of those processing and opportunities are coming back to New Zealand. So I do see some opportunity with the cost of manufacturing and labour in New Zealand has been quite positive.
But meantime, we're still seeing a flood of people exiting New Zealand, a lot of them going to Australia. When is that going to end?
That's right. One of the articles I read was that the cost of labour in Australia is equal to about $50 per hour, where here the individuals about $20 an hour. So a huge cost differential. Therefore, if people want to actually go and earn more money, have a better potentially quality of life, they're going to Australia. So it is a concern. The whole need to try and close that gap with Australia, I think should be a very important priority for the New Zealand government.
Yeah, but I'm not seeing any leadership from the New Zealand government in terms of how we're actually going to kickstart the economy. Sure, they can talk about slashing and saving,
right,
but where is the growth coming from? How do you feel they're doing? What's your advice to them?
Well, I think they need to focus on two areas. If you look at New Zealand, we're really a lot of small enterprise, entrepreneurial family businesses. I think we need something to encourage them and motivate them. I think that's very important. The second one is, does the current economic climate and the exchange rate challenge our business models on our local manufacturing? And if our exchange rates stay where they are, potentially we're going to be threatened to cheap imports, manufacturing overseas, production done overseas, and therefore in the long term we might not have enough manufacturing capability here. So again, we need to do something to protect that sector. Otherwise it does question the future outlook in New Zealand.
You worry also from another point of view about particularly the agribusiness sector, the rural sector, Ian, and that's, where are the new people coming from to run it in a really smart way?
Yeah, and I was very pleased to hear Stephen Joyce yesterday start talking again about tertiary education funding and trying to do something with the student loan structure. We've been saying for the last year that interest-free loan structure needs to be far more targeted towards economically valuable careers, such as those in agricultural science and business management around farms. We're still getting 15, 20, 25 applications for every job we've got as an accountant. We're training far too many accountants and not enough people that really can drive value in the agricultural sector, which is the core of New Zealand. So if Mr. Joyce can do something to address that and do that in the budget, I think that would be absolutely critical.
Finally, I know you're very concerned that Varroa mite in the bee colonies has now hit the South Island.
I think that's a really significant issue for New Zealand agriculture. 10 years ago, the bee population contributed $5 billion of economic activity to the rural sector. That will be at least double now. And what we've got is the chemical controls around the bees are starting to fail. There's only one now that still works. If our bee population starts to see the sort of colony collapse that has been seen in the US and other countries, we are facing a real significant issue. We need to collectively get on top of this issue. It's becoming more than just, a little problem. It is actually becoming a critical issue. So I'm hoping to see some collective action around that soon.
And when it's on the radar of a company like KPMG, whoa. Can I ask you very quickly, KPMG is now pulled out of Pine Gould Corporation. You resigned yesterday. What's going on?
That's right. That matter is confidential to our clients. So they've actually made an announcement to the stock exchange with continuous disclosure. So that's now out there. So,
but fair to say you had serious concerns about some of the ways they were doing business.
We had some concerns on related party transactions, so that drove the need to resign as auditors.
Okay, stand by. We'll see where it takes us. Thanks to my guests, Ross Buckley and Ian Proudfoot of KPMG. Be sure to check out our website. Meantime, Ian tells me he spent many a happy hour on the cricket pitch growing up in England. He also tells me it takes a lot to stop play on the pitch, unless, of course, you're confronted with, well, see for yourself. Keep the faith. See you next time.